How to write a business plan, which is directed towards business owners who wish to grow or expand their business, and to individuals as entrepreneurs who want to start a business. Let's begin. We start with the course objectives. There are two key objectives we will cover. One, explaining the importance of business planning. Two, define and describe the components of a business plan. Under this, we have the course outline. 1. There are 8 topics within this course. 2. Together they tell a story that will help you understand why planning is important. And 3. Most importantly, how to prepare a winning business plan. The next thing is, why is planning so important? 1. Planning gives you a blueprint to follow. 2. It's a communication tool for investors, suppliers, and others. 3. If you don't plan for the success of your business, you will likely fail. It's that simple. Before you begin writing your business plan, consider 4 core questions. 1. What service or products does your business provide, and what needs do they fill? 2. Who are the potential customers for your products or services, and why will they purchase it from you? 3. How will you reach your potential customer? 4. Where will you get the financial resources to start your business? Let's look at the big picture. A good business plan is a compelling story about your business. It explains who you are, why you're in business, what you do, how you do it, where you operate, how you will generate profits, who your customers are, and why your business is important. So let's take a look at the snapshot of a business plan. A typical business plan includes the following components. 1. Table of contents. 2. Executive summary. 3. Business description and vision. 4. Definition of market. 5. Description of products and services. 6. Organization and management. 7. Marketing and sales strategy. 8. Financial management. 9. Appendix. Together, they represent your business plan. So the next step would be, let's start with the table of content. It assists the reader in finding specific topics and areas of interest. What it brings is organization and structure to the document. Next, the executive summary. Although it is typically the first section reviewed by a reader, it should be written last, after the details of your plan has been exposed. The executive summary provides 1. An enthusiastic snapshot of your company. 2. Explaining who you are. 3. What you do and why. And it should be for less than 2 pages. And 5. It should be easy to read. After reviewing this section, the reader should have a good basic understanding about your company, but most importantly, want to learn more about your company. Let's move on to business description and vision. This component of the plan is pretty basic. It describes the business. It should include 1. A crisp mission statement. 2. A focus statement about the company's vision. 3. Specific business goals and objectives. 4. Background information about the company. 5. Identify the key principles or owners of the business. Your business goals and objectives should be specific and attainable. The history of the company should be just that. It should be described when and why the business was started and who the founders are. Now let's move on to the mission statement. The mission statement is a brief statement about who the company is and what it stands for. The intent of the mission statement is to clearly express and describe the purpose of the business. Don't just write down a mission statement. Carefully develop the statement that is an expression of your business. Now let's move on to the vision statement. The company vision statement is about the future. The statement outlines what a company wants to be. The vision statement should be memorable, expression of hope, and an inspiration. A business without a vision is a company that is focused on the past. I repeat, a business without a vision is a company that is focused on the past. Now let's move to the definition of market. Defining your market is an important part of the business plan. The first step in defining your market should be to describe the industry you operate in, as well as the potential or prospect for your business. The second step should be to describe your customer's needs. Explain why customers will buy your product. Specifically, what needs are you satisfying with your product? And the third step, to identify your target market and profile your customers. To do this by answering several questions. 1. Who are your current or prospective customers? 2. What do they buy and why? 3. What market segment or targeted group are more likely to buy your product? Remember, a market segment is a grouping of people sharing one or more characteristics that cause them to have similar product needs. A market segmentation is the process of dividing a market into distinct segments. It is critical that you understand the value of defining your market. If you don't know who your customers are, you can't develop a strategy to reach them. If you can't reach them, you will likely not be effective in selling your products and services. Next, description of product. In this section, you will 1. Identify and describe all of the products and services your business sells. 2. Explain how your products and services are competitive. 3. Provide a crystal clear understanding of why you are in business. 4. It is far more worthwhile to explain how you are competitive. 5. Reference your brochures or pictures in this section. Now let's move on to organization and management. The first part of this section should describe how the company is organized. 1. Specifically, it should explain the legal form of ownership. Are you a proprietorship, partnership, or corporation? 2. It should describe the leadership of your company. 3. You should describe the process that support what your company does. How are your sales generated, products developed, and service provided? In addition, this section should describe what licenses and/or permits your company operates with. 4. Brag about things that make you special or qualified in special areas. 5. This section should include a brief bio description of each key manager within the company. Now let's go to marketing and sales strategy. In this component of the business plan, you will discuss reaching customers. In simple terms, making products available that satisfy customers while making a profit. To create an effective marketing strategy, you will need to find answers to a number of questions. Questions like 1. Who are my customers and potential customers? 2. What kind of people are they? 3. Where do they live? 4. Can and will they buy? 5. Am I offering the kinds of goods and services they want at the best place, at the best time, and in the right amounts? 6. Are my prices consistent with what buyers view as the product's value? 7. How does my business compare with other competitors? Now, marketing research deals with people and their constantly changing feelings and behaviors. When doing research, you must find out what people want to buy, not just what you want to sell them. Under marketing strategy, identify customers groups in which a business can better serve than its competitors. The strategy will address unmet customers' needs that offer adequate potential profitability. Central to any successful marketing strategy is an understanding of your customers and their needs. The ability to satisfy your customers' needs than your competitor are able to help you build customer loyalty and increase sales. But most important, both customer needs and the business environment in which you operate are constantly changing. I repeat, both customer needs and the business environment in which you operate are constantly changing. Your market strategy needs to be considered what changes are taking place and the opportunities and threats that are emerging. Now, a successful marketing strategy will typically mix the 4 P's. Remember, trying to convince people to buy something they don't want is extremely expensive and seldom successful. The 4 P's of marketing are product, place, price, and promotion. The product deals with specifications of the goods and services and how it relates to the end user's needs and wants. Place, how the product gets to the customer. In other words, how the product and services is sold or distributed. Price refers to the process of setting a price for a product including discounts. Promotion refers to the various methods of promoting the product, brand, or company. So let's go to the financial management side. The financial management component of the plan should include financial statements or forecasts for the business. This important section will 1. Explain your revenue projections, 2. How much money you have and need, 3. When and how the business expects to make a profit, and 4. It will also reveal what your marketing and operational processes and plans will cost. The financial structure of your business is its foundation. A foundation that is generally described in 3 financial statements. 1. The balance statement. 2. Income statement. 3. Cash flow statement. A business will prosper or fail based on the owner's effectiveness in planning and controlling these components. Now, under the balance sheet, it represents the basic accounting equation. Assets minus liabilities equals net worth. The balance sheet is considered a snapshot in time. The income statement is a measure of how a business has performed over a specific period of time, usually 6 months to 1 year. The income statement is also called a profit and loss statement or an income and expense statement. Now, the cash flow statement is used to monitor and project incoming and outgoing cash, typically on a monthly basis. Now, the cash flow statement is a valuable tool to monitor and project the financial performance of your company. So now that you know what financial statements are and how important they are, for a new business, the financial component of your plan should include estimated startup cost, a projected balance sheet, a projected income statement, and projected cash flow statement for 12 months. All statements should be projected 1 year forward. Now, for an existing business, you should include 1. Current and prior balance sheet, 2. Income statements, ideally for the past 3 years if available. You should also include a current 12-month cash flow statement that is projected for at least several months forward. If you are submitting your business plan to a bank for a loan, you should include a current personal financial statement on each company principal and a copy of your business and individual federal tax return for prior years. Now remember, well-prepared and accurate financial statements are critical components of the business plan. On to the last component, the appendix. This section should help define your business and highlight your accomplishments by including brochures, resumes, pictures, and other important information. Now, this ends the segment on how to write a business plan. Now that you have reviewed the video and gained knowledge on how to write a business plan and to take the next step, contact Veterans Corner at 337-315-3259. or email greg@veteranscorner.vet or website www.veteranscorner.vet. Thank you.